I have no idea how this stuff works. So I apologize. There's like one of you on here. Another 0. Pull up the phone so I can get like questions and stuff like that. But how are you guys doing? Just kind of waiting. I don't know if anybody's even going to show up. I might have to delete this. It's a pretty nice day. Is this up? Retro Snack. It is. PMC. You were second. My hair's probably all messed up. Don't really care. It is what it is. Alright. I'm technically first. Man, it looks like I'm sunburned. Like, oh well. EMC. It's going pretty well. How are you? I don't know how to like. Oh, there's the live chat. I gotta like clear that up. All right. So yeah, I guess I'll just kick this off. I don't know how many people you actually are gonna show up or whatever, but I have my questions on my phone here because for some reason on the chat there on the right it's not showing up. But yeah, this is a view from my apartment. Don't think you can get a really good view, but I'm just out here sitting on the balcony. Out there to the right, if I could show you guys maybe in a little bit, there ends up being more people. I'll show you the Caribbean over there, but not a lot of commentary at the moment. So I guess I'll just kind of chit chat by myself and see what folks are really interested in talking about if they ever decide to. Yo, finance for thought. What's going on, man? I guess a little bit about me. Yeah, just hanging out. That's really all. I'm not really good at these things, nor am I really comfortable with the camera. So we got a little gentleman over there on the balcony next to me, hanging out. He's probably gonna be wondering what the hell I'm doing. I'm wondering what the hell I'm doing too, but curious how this stuff works. All right. So of the whole 2 of you that are in here. Oh, thanks, man. 2 years watching my content. That's cool. That's awesome. Means a lot. That's cool. Yeah, I do it for all y'all, man. I don't do it for myself. I do it partially to document my progress. And I do it partially to keep myself motivated, keep myself interested. Because there's a lot of y'all in the community on YouTube that really try to document your progress. Some of you are ahead of me, some of you are behind me, and just watching y'all, communicating with y'all, is really what keeps me interested, keeps me going. Nix 2525. I'm currently living in Trinidad and Tobago at the moment, but I'm originally from northeastern part of the United States, Pennsylvania, and then about 6 years ago I moved to Houston, and then now currently living in Trinidad for work at the moment. Finance for thought. What's your asset allocation, small, medium, and large? I don't really think about that per se. I generally just invest in something that I see if it looks like it makes sense to invest in. And I get this question a lot. about what I specifically invest in, um, or what I specifically look for. And it changes really. I mean, every single asset class has its specific things that you need to look out for. There's no like one size fits all metric for every stock that comes around. So, for instance, real estate investment trusts or real estate, you want to look at the price to adjusted funds from operation. If that's a good number, anything below say 15, it's pretty much comparable to your price to earnings ratio. But even still, I don't necessarily think a price to earnings ratio on most stocks is what you should be looking at either. So um, I also look at price to free cash flow or price to cash flow, because sometimes earnings can get manipulated by tax changes, or if somebody wants to write something off, or so for instance, if you work in a heavy capital expenditure company, like let's say take BHP for example, they do a lot of mining for natural resources, and there's something called depreciation, depletion, and amortization. And so because they work in a natural resource sort of environment, they're able to invest a lot of money into their mines and depreciate that over however many metric tons of iron ore or whatever they buy. And so when actually money comes in, or revenue comes in, or income comes in, they can take that, whatever that depletion cost is, and take it off the earnings. And so what actually might come through the cash register, an actual payout to investors might be say $10 billion, but their earnings might be only 8. And so technically it might look like, well, they're paying out more in dividends than they're actually making, but if you look at their cash flow from operations, then it looks a lot better. EMC, do I own any home or real estate? I do not own any home or real estate. Financial investor, what's going on, man? I don't own a home or real estate. About, I want to say 4 or 5 years ago, I looked at buying a house in Houston. That was probably when I was like 23, 24. And I almost bought it. Fortunately for me, I put 3 offers in 3 different homes. And fortunately for me, I guess at the time, I now view it as a blessing, but at the time I was pretty upset, but ended up being a blessing in disguise, because then I realized that owning a home at this point in my life just isn't for me. I'm single, still mobile, moving around, not necessarily sure if, the next place I'll live is in, even the Eastern Hemisphere, or if I'm going to go back to Houston or what have you. At the moment, it's looking like going back to Houston, but who absolutely knows? I don't know. So owning a home for the time being just doesn't make a lot of sense to me. I'd rather take that capital and invest it in things that pay for cash flow. Oh man, some good questions so far. Trey Surgers, hello from Belgium. How are you, sir? Welcome from Belgium. That's crazy. All good from Sealy, Texas. That's awesome. So quick answer to, I'm sorry if I'm mispronouncing your name, Tur, T-U-R. 3M and Altria. 3M I think is a good price. The thing that scares me, I have about 31 shares, I believe, so disclaimer on that, but for 3M, the one thing that somewhat concerns me is the revenue decrease, but I think it wasn't that expensive or that drastic. I think it was only like a 2 to 3% drop from last year, but I don't remember exactly. But that's somewhat concerning, and I don't necessarily know if that's because people are going more digital or what have you, but their value, in my opinion, is pretty good. Their price to cash flow is pretty good as well. So I've been buying, and they're great. I don't know if they're a dividend king yet, but they're getting up there. They have a pretty good, consistent increase in dividends. Altria, it's a sin stock. I'm personally fine with it. I personally think that they're doing a good job by investing in alternative businesses. They have a really good wine and beer business as well. They own, I forget, 10, 15% of Anheuser-Busch InBev. So they have a steady cash flow of that. So 10% of the largest food and drink company in the world. I mean, you're going to get a pretty good dividend from that. Just knowing what InBev pays a pretty decent dividend on an annual basis. So that's going to give you some money. Juul, I mean, is that going to be a good investment? Don't necessarily know, but I think that, diversifying, if that ends up being the way through, then it is what it is. And then they also have the great partnership with Philip Morris, because obviously they used to be brother and sister companies. So if IQOS or I Quit Old Smoking or their new smokeless devices come and work through, and they're able to get that in the U.S., then that's all beneficial as well. So I own a decent amount of Altria Group. I don't know if I'll be buying any more because I own a little bit of Altria and Philip Morris, so I don't know if I'll be buying any more of that. But 3M, I'll probably be buying more. I noticed it dipped into the 150s last week, but that was, I guess, Thursday that I looked, so I didn't really check Friday if it was still there, but I might throw a couple thousand at that. I love dividends too, AMC. I love dividends too. Satisfying MSG. Hello, how are you? Um, let's see. Did I miss anything else before I skipped in? Financial investor accommodations are a lot better than I expected. You can't really see it all too well here, but up and to the right, there's Trinidad's a little bit more mountainous than I thought. So it's a nice 3-bedroom apartment. So I definitely can't complain with that. It's got a pool. I got to figure out how to best get this. This is my first really live stream ever, so it was a little interesting for me. But don't necessarily know how to like best position the camera or the computer to really get it working. So you guys can see everything. And plus, I don't think this camera is very good either. But if you look over here a little bit to the right, I don't know if I pointed well because there's a little bit of delay in the live stream, but you can see some of the mountains. And if I moved even a little bit more, maybe if I move my head that way, you can see slightly a little bit more mountains as well. But over there, directly, you can see the Caribbean. And if I had binoculars or were a little bit higher up, maybe I'd be able to see Venezuela, which is a positive or negative depending on how you look at it. But I thought about starting my own business so you can be busy with passions of sorts while also growing your income even more. I'm trying to do that with YouTube, but I've realized that one of the things that I don't do is I just being personally honest with you guys, and I would love you guys to comment, let me know in the comment section, is I do YouTube, but one of the problems that I always have is I'm more concentrated on putting out work and putting out content rather than taking my time and honing it and making it better. And so you could say, for instance, maybe it's because of like, say, the microphone quality or something like that, or maybe I don't make like a fancy intro like some folks, or maybe I don't try to make as clickbaity of titles or what have you. But I generally focus on putting out more content that's focused for your education rather than flashiness, if that makes sense. And so I think that almost hinders my ability to grow as a channel. But I'd rather be at that respect, like it means more to me than I guess the money that comes in by I guess I don't want to say selling out, but adjusting what I want to do just for the sake of views, if that makes sense. Anyway, I don't think that really helped, but there are some things that I've tried making businesses with. There was an app that I tried making about over the past year or so, and we're still in discussions with that. It's not finance related, but there's other apps as well that I've tried thinking about. There's a whole list of apps that me and a partner have come up with. So if you're an app developer and you're looking for apps to create, we have a whole laundry list of apps, and we can come up with a creative way to finance it and creative way to get you the money so you can work on it. So all good asks, heavily invested in energy, and she's totally in the red. What are my thoughts on it? So I don't necessarily know what exactly you're invested in with energy. I personally am invested in it for the long term. There are some stocks like Chesapeake, Kinder Morgan, Seadrill Partners that I'm way down in the red on, and there are some stocks that I'm way up on. So if you consider BHP materials, or if you consider that energy, I don't know. They do have a petroleum sector as well, but they're a natural resource company. I've made over 100% on that, and I'm still getting paid dividends and reinvesting those. Shell, I made 50%. Exxon, I'm a pretty good cost basis on. So I think what ends up happening with some folks is they invest too much at once rather than consistently investing. And I know it's very difficult to continue to invest and spread money across multiple different things, but I think in the long term, energy will be there. Companies that I really like in the energy sector is one of the things that I like to think about when I'm investing and at least focusing on my businesses and my work is what's actually going to be beneficial 10, 20 years from now. And I think that technology companies are very good about doing this, very good about, extremely good about understanding the purpose of what they're doing and why they're doing it. So I think sometimes companies get too locked up, and I don't want to get too Simon Sinek on you guys, but too hopped up on profits and what have you, and they lose the forest through the trees instead of thinking about what their actual purpose is. And so they'll cut costs here, cut costs there, just so they can make a dollar. But at the end of the day, they lose focus on innovation and might not necessarily make the right choice or go down the right avenue. So what I mean by that is, if you look at companies that are in the energy sector like Shell, BP, Exxon, they're trying to get like the next tranche of investments. Like Shell's doing a lot of solar, wind, BP's doing a lot of wind, and they're also doing biofuels. Exxon's working on their algae biofuels, and so I think with that they're trying to make their companies more prone to not just oil and gas, but focused around energy as a whole and natural resources as a whole. So hopefully that helps a little bit. But I think if the companies do become successful at that, like Shell, I think is at the moment at the forefront of having the best all-around business, and I think BP is probably second behind them. Then you don't necessarily have to worry about just oil, but energy as a whole, and energy will always be there. So if you need a company to continue to pay dividends, then there's that. I'm sure that they'll be fine for the long term. So what else? I answered that. Answered financial investor. Accommodations are definitely better than I expected. Bonds. Ice asked about bonds. I don't really know much about bonds, to be 100% honest with you, so I don't really invest in them too much. STN86, love the channel. Thanks, man. Very inspirational to see how far you've come. Starting early 2018 yourself. Awesome, man. Keep it up. Let me know how you're doing. Always check in. Love to see you guys. Always checking in. The people that always are commenting and letting me know how they're doing, what they made last month, and that's inspiration for me, and it's inspiration for you, because you're not only discussing with yourself. Something that I always get upset about is I try to talk about this stuff with my friends, and sometimes they aren't that good about listening or fulfilling what they expect. They always like, what should I do here? What should I do there? And I'll give them my opinion, and of course I'm not a financial advisor or anything like that, but they'll immediately just go back to what they're doing. And I don't want to say be a sheep, but it's a mindset shift, and we talk about that a lot, and at least I talk about that a lot. So how much cash do you need to make 1,000 a month in dividends? So ice, that all is dependent on what your risk is. So this is a cool topic. So I think one of the things that people always ask is like, what do I need to make 1,000 a month? What do I need? And that is entirely dependent on you, your risk, what you guys want from your investments. So if you're looking for capital appreciation and all you want to do is make the most money in the next 5 years, then you don't even really need to be worrying about how to make dividends per month. You need to be worrying about growing that portfolio, and I don't really know how to do that, so that's why I focus on dividends. And I guess depending on how you feel, I don't necessarily know if I'm doing the right thing with growing my dividend portfolio either, but I'm trying the best I can. But what else? Where was I going with that? But if you have like a very long time horizon and you want very conservative dividends, and you don't want to be risky, that means not investing in things that pay an 8 to 10% dividend yield, because generally speaking, those are pretty risky, and the dividends might get cut or the price is depreciated a lot. So, the company might have to go through a different financial structuring and might have to pay off some debt, what have you. Kind of like what happened to Seadrill Partners, GE, stuff like that. At one point, they were paying 5-6% dividends, but they got cut. Seadrill Partners at one point was paying like a 20% dividend, gets cut, right? So Lynn Energy, really good point in like 2013, 2014, goes through a downturn, was paying like 10-12%, gets cut, right? So not saying that companies that pay 1-2% are any better in terms of not guaranteeing you not get cut, but I'd say they are safer if that helps. So they might have more wiggle room to continue to raise the dividend, and you don't necessarily need the money today. You might be looking at companies that have a lower dividend yield, but there are companies like AT&T and Verizon, which I think their dividends are very safe, that pay 5-6% dividends. But you're not going to get too much growth with those companies, 2-5% maybe. But then there's companies like AbbVie, which grow at say 30%, or Cyrus One, which is growing 20-30% per year. So it all really depends on what your goals are. But to actually answer your question, very simply, 1,000 a month. First and foremost, like it's not too simple or too difficult of an equation. You just figure out, okay, 1,000 a month, that's 12,000 a year. You just take whatever dividend yield you're looking for, whether that's 1%, 2%, 5%, 10%. If you're looking at 10% dividend yield, and that's what you think you can get on your money, 12,000 divided by 10%, that's going to get you 120,000. And vice versa. If you do 1%, you say, well, dividend yield of 1%, then you're going to need 1.2 million, right? It's just adding another zero, or dividing 12,000 by 0.01. It's relatively simple. And then same thing with 2%, you just divide by 2, or divide by 2% for your 12,000 for the year, and that gets you 600,000. So it's a pretty easy equation. So for me, to make 1,000 a month, generally try to aim for 3.5 to 4% dividends. At the moment, I'm like 4.5%. But if that's the case, then what is that? I'm not good with math. So to make it, I think it's like 300,000. But let me double check. So 1,000 a month times 12 months divided by 0.04. Yeah, so I need like 300,000 or so. But I need it a little bit less because essentially I'm investing at like 4.5%. So next question. We're averaging like 4-5 minutes per viewer, which is pretty cool. I don't know what this really means, but our friends don't care so much, so we turn to YouTube. That's very funny. That's very true. Yeah, I remember talking to my dad about this stuff, and he just like will not pay attention. He just zones out. Love him to death, but his passion is something else, and my passion is investing. So I love talking about it. He does not. That was a nice boat flying by. No worries. What did I answer? Oh, how much? Yeah, so hopefully that helps. And I think I made a video about it within the last 2 months. So for Ice. So if that didn't make sense, that explanation didn't make sense, I would say it's probably like within the last 20 videos, just go on my library and see if you can find it. But yeah, satisfying MSG. That's pretty funny. That's very true. Friends don't care, so return to YouTube. Oh man, finance for thought. Mitigating taxes. To be honest with you, that's one thing that I have started to think about more in recent times is whether or not I'm paying ordinary or non-ordinary, if that's the right term, taxes. And I don't remember if the term is exactly ordinary or non-ordinary, or qualified or non-qualified, I think is the actual term, qualified or non-qualified. But what food for thought might be referring to is some dividends are only taxed at say 15 to 20% depending on the tax bracket. Others are taxed more at your income. So if you're at the highest, your income tax rate. So if you're producing say at the 39% tax bracket and you're invested in real estate investment trusts, the dividends that you get from that are actually taxed at almost the 40% tax rather than the 15 to 20%, which is favorable. Yeah? So things like 3M, things like that aren't partnerships, like K1s and stuff like that, they get taxed at the ordinary and non-ordinary, basically the 15 to 20% tax bracket. So the favorable tax bracket. But companies that so the reason why people create partnerships, K1s, real estate investment trusts, is to avoid paying taxes, and so the taxes get paid by the shareholders yourself, like me, you, what have you. So if you're investing in REITs and you get, say, 20 cents in dividends, really 8 cents of that goes to the government, or let's say 0% of that, 0 cents go to the government, depending on your tax bracket, right? So those things are favorable to own when you're retired because then it's like owning regular income. But if you're trying to invest in, say, other companies, it might be something that you need to look at, right? So if you're able to depreciate a lot of your assets, then you can offset some of that. But if you, let's say, make $1 million a year and you want to invest in something that, say, pays 4%, or you'd rather, which is non-qualified, like a real estate investment trust, and there's another thing like 3M that's paying 3.5% or something along those lines, which I know it's paying like 3%. For example purposes, 3.5%. It actually might be a better choice for you to choose 3M because you might only have to pay 20% in tax rate at that point rather than the real estate investment trust, which you might have to pay 35 to 40%. So I know I didn't necessarily answer your question per se, but that is something I've been giving thought to and looking more in depth because I do invest a lot in real estate investment trusts and partnerships, and so that's something I should investigate more. So that $10,000, let's say if I were to have like a very wide, the $10,000 a year that I'm getting at the moment in terms of forward 12-month income, if I were to have say a favorable tax rate, I might get 8,000 of that isn't taxed, let's say. But because I invest in K1s and stuff like that, I might actually only walk away with 7,500 because of my tax rate and the fact that I'm investing in REITs and partnerships and what have you. But if I were to invest in say things like more like 3M that pay an ordinary dividend or qualified dividend, then I might get 8,000 out of instead of the 7,500, if that makes sense. So I apologize if I've lost anybody, but it's still something that I'm relatively new on and I'm trying to understand as well. So. Love your channel, man. Well, I'm sorry, I don't know your channel. Do you have a channel? Ice, do you have a channel? I guess I'll see you in a little bit. But out of questions at the moment, anybody have any questions, feel free to put them in the live chat here. We're up to 17 viewers, average of like 5 minutes per viewer. But yeah, oh, Vanguard ETF VDE. All good. I don't know anything about VDE. Is it a dividend fund, I assume? The only ones I really know about are VIG, and I think that's really it. Is that the S&P 500 one? I don't know. But yeah, make sure to give this video a thumbs up if it's something that you actually believe is beneficial. There's like 15 or so of you guys on here now. I think we've had like 80 people fly through. At least that's what it's saying. 80, 81 people fly through. I don't know if the 16. I have kind of a glare because I have the sun behind me here, but I don't know if that 81 is the total people that have flown through, or total comments, or what have you. But make sure to leave a like if you do like it. If you don't like the live streams, give me a thumbs down. But this is the first one I've ever done. Wanted to get a good view, but I think with the glare and the camera quality, because this laptop is forever old, as you can tell by the mic quality, maybe I have thought about buying a new laptop, but it's just excess money that I don't need to. So you do have a YouTube channel. So everybody, Ice Ice, I'm gonna check it out. You guys should check it out too. If you like watching all my videos, thanks, man. Appreciate it. Mariah Norris, thank you. Nix2525. So Fundrise. So that goes back to, I don't know when you joined, but that goes back to the tax question that I just kind of came out of. So I didn't realize this until recently, but those are non-qualified dividends. So Fundrise, while I think it's a great platform if you want to diversify and get yourself into real estate aside from stocks, and if you're not comfortable with, say, like REITs and stuff like that, then Fundrise might be a good alternative for you. Once again, not a financial advisor, but you know what it is. But they're non-qualified, right? So if you're in a high income bracket, it might be worthwhile you investing your money in something like 3M to actually lower your tax bracket, or not tax bracket, but lower your tax liability, if that makes sense. But I like Fundrise. I think I originally had a problem with them because I think they were promising higher returns, but I think it might have been user error, meaning me. The reason why my returns might have been lower because I was reinvesting my dividends in some things, and those reinvested dividends were going into ramping up funds. And so if you know anything about Fundrise, or I'm not sure if this happens with other real estate crowdfunding or not, but if you reinvest your dividends, it might throw it into something that isn't necessarily operating yet. And so if something's not necessarily operating, it may not necessarily have bought all the assets yet. And so it just kind of has your money sitting on the side waiting to purchase those assets. And so in that case, you're not getting any money, or your money's not actively working at that point. So keep that in mind. Keith likes kids. Am I gay? I am not gay. But if you are gay, that's personally, up to you. I have no problem with people if that's what their sexual orientation is. Ice Ice. I like Ice Ice. He's asking a lot of good questions. So we're down to 11 of us now, so people are probably hopping out. I don't know if they heard what they liked or they just don't like me. One or the other. Either way is perfectly fine. But my goal at the moment, so I think I made a video on this. It's at the moment my current goal. So my reachable goal is to try to get to about $4,800 or $5,000 a month. Or sorry, $4,000 a month, $48,000 to $50,000 a year in dividend income. That's just basically because when I was in Houston, that was around my expenses at the moment. So 50,000 or so US dollars for the year. So that equates to about $4,000 to $5,000 a month in dividend income. So that was kind of the hope, or the near-term goal. Obviously, the long-term goal, it's really taking the blinders off, because once I get to that $4,000 to $5,000 a month, I'll continue to work for sure for the foreseeable future. I'm not saying within the next 5 or 6 years I'll be quitting my job or anything like that, but for the foreseeable future, after I get to that, really I think the goal, long-term goal, would be to, be $100,000 a month or something like that, close to $1 million. But obviously, my goals sort of further away from that. But I think my trajectory at the moment, I can say with confidence that within the next couple of years, I'll be making about $48,000 to $50,000 a year in dividend income. Dang, hope I make it. Thanks, man. Yeah, there's a couple videos where people going down the islands, huh? A couple videos ago, I've kind of outlaid the next 6 or 7 years that I want to be at that point where I can make $50,000 or so a year in dividend income. And of course, that comes with taxes and stuff like that. So would it actually be paying for all my expenses? Maybe not. But I don't necessarily know at that point if I'll take my foot off the gas. I'm hoping not. I hope I have ambitions higher than that. But it is what it is. So, any last minute questions? I think I'm gonna sign off. I have to get ready for dinner. But yeah, this shirt's the same shirt I wore in the video earlier this morning. So I filmed that this morning. So don't feel like I wore the same shirt yesterday. I wore the same shorts though yesterday. So any final questions here? How much investment is needed for 5K monthly on average? So I'll give you a range because I answered that question. I think it was Ice Ice that asked that question somewhat earlier. Maybe it was somebody else. How much to make 1,000 monthly? But oh yeah, Ice Ice, no problem. Thanks for asking so many questions. You kept this going. Otherwise, I would have had to go on the spot thinking for myself, and you guys know how that goes in my videos. It doesn't go all that well. But for instance, for you, what's your name? Crypto Max. I just did a quick calculation, so there's a video on this as well. If you want to go back, it's like within the last 20 videos, basically figuring out how much money you need to invest. But it all really depends on what you're willing to risk and how safe you want your dividends to be. So, for instance, you can do everything generally on an annualized basis. So, if you want 5,000 a month, multiply that by 12, so that's about 60,000 a year. Yeah. So if you're actually able to achieve that on, let's say, 1% dividends, then divide that by 0.01 and you're going to need $6 million, yeah, which is pretty difficult. But if you really still need that $60,000 a year and you're able to achieve that on 2%, then you just divide that by 2, or multiply it by 2 rather, or divide by 2 because now your dividends are twice as much. You're able to achieve it on $3 million, let's say. Well, let's say you're able to get it up to, say, 10%, right? You do something relatively risky, but in your terms might seem safe, yeah? So you only need 600,000, yeah? So, and then if you, say, do 5%, then you really, I think, only need half of that, or twice as much as that, yeah? So you only need $1.2 million, yeah? So basically just take whatever you think your annualized monthly or your annualized amount would be. So if you would say, I want to make, let's say, 5,000 a month, 10,000 a month, multiply that by 12 to get an annual basis, and then it's divided by the annual dividend yield, and hopefully that'll be able to help you out. Yeah, finance for thought. Thank you. Yeah, it's one that's been in the back of my mind, but I really need to start. One of the things somebody asked me earlier about businesses. One of the things I really need to do is start writing down all my video ideas because I keep them in my head, and I'll have like 3 or 4 in my head, and then something might happen. I might go out to dinner or make a video or something more relevant might come up, and I'll completely forget to do it. So I need to start writing those down, those ideas down. So. All right, guys. Been live for about 20 or so minutes. Don't know what that means, Kevin Johnson, but hey, man, how you doing? So anyway, hope this was helpful. If you guys haven't already, subscribe. If you guys have any comments about what you're willing to hear, listen to, or any comments like finance for thoughts, questions like about qualified or non-qualified dividends. Feel free to leave them in a comment section down below. But otherwise, I will talk to you guys soon. Yeah. All right. Have a good evening. Now I got to figure out how to turn this thing off. Yeah. Oh God. Oh God. There it is. Have a great night.